Hey everyone. So, big housing and economic news this week that could actually reshape the Waterloo region market. And it's not just about real estate, it's also about trade policy, jobs, and housing supply. So, let's break it down together. The Waterloo Region Record had one of its articles this week that the Canada Mortgage and Housing Corporation just released its 2026 housing outlook for Southern Ontario, including Waterloo Region. Headline says, lower new home construction, light sales activity, and flat prices for 2026. So CMHC points to several local challenges, including weak population growth, threats to automotive jobs, decline in the education sector, and a water-related development freeze. Now, that combination is dampening builder confidence and slowing starts, meaning fewer new homes are being built for people to own. And that's why construction could slow again next year. Number two, what this means short term. Short term, flat prices and slow sales usually feel boring on the surface. But this is actually a slow reset in the market, not a collapse. Buyers today have more negotiating power. Sellers still sell, but pricing needs precision. It's not about a crash, it's about a pause in growth as uncertainty weighs on demand. Number three, the latest U.S. trade news and why does it matter? Yesterday, the U.S. House of Representatives voted 219 to 211 to overturn tariffs that had been imposed on Canadian goods, including those that were impacting the auto sector. That's a rare bipartisan rebuke of President Trump's tariff policy and highlights growing concern about trade uncertainty. Now, here's the key point. These tariffs have been cited as one factor discouraging investment and job growth in manufacturing, especially automotive jobs, which directly impacts confidence in regions like ours. So the House vote is a signal that trade tensions might ease, even though the measure could still face a presidential veto or need a Senate action. In simple terms, if tariffs are lifted, so we have less economic uncertainty. If jobs stabilize, more demand for housing. Now, number four, why slower new construction could eventually help prices. This is where we flip the narrative. Many people think slow construction means bad, but here's the comeback. Less new supply entering the market over the next few years means the overall housing shortage persists. That means we're going to be running out of inventory sooner than later. When economic confidence returns and prices are expected to start rising again in 2027 and 28, that existing shortage could pressure prices upward, especially if population growth recovers and trade uncertainty eases. So, slower starts now can mean stronger price momentum later, particularly for ownership housing, not just rentals. Number five, what does this mean for you? So for the buyers, this is the calm before the next chapter. Negotiate now, plan for long-term equity. Now for sellers, position your home smartly and leverage stability in pricing to attract serious buyers. Investors, a future environment with continued supply constraints plus resumed demand could translate into strong appreciation post-2027. If you want a deeper dive into how this forecast impacts your neighborhood or a personalized market consultation, drop a comment below and subscribe for weekly housing updates. 519-497-8731. My name is Ilyas and I'm with Remax Twin City in the local Kitchener-Waterloo market.